Warren Buffett's advice, even though it may seem like advice, is probably more like instructions, as he is a 9.9% shareholder, I believe. I think this is a tough job to fill, and the reason it is you're going to need a very strong, charismatic leader to overcome the very discouraging, continuing process that's gone on the Hill. And I think for all Wells Fargo employees, this has just been very toxic to the culture and very discouraging. And certainly in customer-facing jobs, I'm sure that's the case. So I think when you look out there on the landscape, I don't think you're going to get a big money center bank senior official to take this job. I don't think Wells Fargo is going to want that. I think Warren Buffett's orientation to someone who's seen as an outsider is important. Recently, there's been a lot of talk about Richard Davis, who was, I think, 57 years old and retired as the president of U.S. Bancorp. That's a bank that I know from personal experience is very sensitive to, has always been sensitive to what we call headline risk. It's been a very clean bank. So I think Richard Davis is a possibility. I think Marianne Lake from J.P. Morgan, CFO there, is a lesser possibility, although I suppose possible. But it is ironic to me that Wells Fargo has had such an ordeal here on Capitol Hill, since during the Great Recession they were actually pretty clean and really almost a poster child for good behavior. They did not participate in the three initial securitization craze that created so many problems for banks and their balance sheets. But I do think they'll have to go to an outsider.
The cross-selling obviously was unfolding during that period. But Fred, to that point about an outsider and what Warren Buffett, we just read the quote from, I mean, surely the reason Wells Fargo continued to be in the spotlight so much over the last couple of years, even once John Stumpf was replaced, was that Tim Sloan had been an executive at the time, not maybe a culpable executive, but he'd been there at the time. So even if it's someone from Wall Street from the outside, doesn't that issue get solved? Does Warren Buffett sort of, maybe he might well be pushing for an outsider, but perhaps it doesn't need to?
Possibly, but I think the attitude of Congress and the Senate towards the largest money center banks, and particularly the Wall Street firms, the Morgan Stanley, particularly Goldman Sachs executives, is probably aversive. And so I believe that more of an outsider would probably be preferential.
A lot of this is going on at the same time that the large banks with physical presences are also trying to figure out exactly the right way to approach customers in general, right? You have technology threats. Obviously, it's not just about scandal and headline risk and brand risk. And I wonder just how wide open the board should be about considering somebody even from outside the industry who may have dealt with some kind of transformation like this.
I think that's an excellent point, Mike. I mean, if you think about what Goldman's doing with Marcus and how hard they're pushing into the retail space, Wells Fargo being a great retail bank, I think it's very possible that someone with a very strong retailing orientation and perhaps even a digital orientation could be their choice. And I think that could be very healthy for the bank and very effective in terms of getting their earnings growing again, which that has not happened. As you know, the earnings have basically gone sideways for several years. And I think the retail side of this bank is the real powerhouse.
Fred, what's your take on the hearing on Wednesday, and what's the sort of worst case scenario that could come out of it for the banks?
Well, you know, I have to say I don't think these congressional hearings do anything but show that we have a lot of politicians who would like to get on camera and be angry and be outraged and self-righteous. I don't think anything untoward is going to come from these hearings. Wilf, you said that earlier, and I agree with you. I don't think there's going to be any damage done. I think this is kind of a follow-up where the Congressional Finance Committee is basically saying to the banks, now you see what we've done with Wells Fargo. Be careful. Accept the regulation. And I think that's one of the reasons that the bank sector is under pressure and the valuations are as low as they are. Obviously, interest rates are another factor, but I think it's more than that. I think it's also they are so heavily regulated that I think they have to be very careful and conservative in terms of the steps they enact in order to grow their business.